Let's talk some earnings. First, solar. George Tsilis joining me to take a look at the beleaguered solar panel business that's been halved since its high last year, George. Do you think these numbers are going to help at all? The aftermarket trade is kind of mixed right now, slightly lower.
Yeah. Well, I guess it all depends on the context of how you evaluate the company as well as maybe the competitive landscape. I think this company might be in the crosshairs of DOGE and all the federal government spending, particularly because the company did receive quite a bit of business from the Biden administration's Inflation Reduction Act. So that might be part and parcel of the decline in earnings estimates and sales estimates for the business. But nonetheless, the stock has peeled back about 50% of the gains since, I believe, early last year. As you mentioned, so there may be something here from a bullish standpoint as well. But if you do look at the report, the adjusted earnings posted were $3.65, and that was down compared to the $4.73. But irrespective of that, there's still a gain of around 12.5% for the quarter compared to the same one last year. But sales also came in, despite the miss on earnings, a little bit higher than estimates, $1.51 billion versus 1.48, but that was higher by 30% year over year. So one of the things about this company, I've noticed some ongoings with it. First off, if you just look at the revised guidance or consensus estimates for sales going into 2025, the top line sales estimates at the midpoint were about 5.12 billion. Now, if you look at what the company reported, they changed those estimates down slightly. They were guiding between 5.51 billion. This is the company's estimates. Now they're guiding slightly lower to between 5.3 and 5.8. So they're just moving the target a little bit lower. It was only about by about $10 million. But the EPS guidance, at least the consensus from Wall Street was around $21, and now they've moved it down to about between $17 and $20. So if you split the difference, it's $18.50, OJ. This is revised down. But, just looking at that $18.50 midpoint compared to the current price at the close around 147 or so, for what it's worth, it's only trading around 8 times 2025's earnings. So with that said, there are obviously some there are obviously some contractual obligations or bookings that have been canceled. There may be some challenges from a competitive landscape because of what's going on with DOGE and the federal government, but it's very cheap. And so I wouldn't be surprised if we do see potentially a move to the upside in this name, but consider that still there are risks because they continue to move down their earnings and top line sales guidance.
Okay. So the situation fundamentally not improving too much. Some of the expenses came up a little shy of the estimate, so that might help keep some of that margin in line. Analysts love this thing. 38 buys versus 3 holds, no sells for a stock that's gotten halved in the last 18 months is mind-blowing. Yeah. So to your point about valuation, they better really hope someone shows up to buy at $148. Real quick, GT.
There's a reason they love it, because if you just look at the financials, all else equal, disregarding what's happening politically, it seems like it's very cheap. But it's been doing this for the last 6 months or 2 quarters. So obviously there's something going on with the expectations that there will be some of the bookings that the company has, if you will, or the backlog that they have through 2030 to be cut back. And irrespective of that, it's still getting cheaper as the price is going down, because even though the earnings estimates are coming down just a little bit, it's still valued at basically a stock that's not growing at all, but it certainly is.
Okay. Nice, George. Good analysis. Thanks. Appreciate that. Maybe